right, the last section of Chapter 3 deals with the adjusted trial balance. After you finish all of your adjusting entries, you then will post those entries to the general ledger, and then you can prepare your adjusted trial balance. I will say in the other videos, I think I may have used the word adjusted trial balance when I should have just said the unadjusted trial balance or the regular trial balance. And so that's what you should have been using for prepaids and accruals, is that unadjusted trial balance. And then when you finish all of your adjusting entries, then you would prepare the actual adjusted trial balance when all of that is done. The purpose of the adjusted trial balance is to prove the equality, that your debits equal your credits. And the second purpose is that they are the primary basis for the preparation of financial statements. This next section, I know it's probably coming up a little bit blurry for you. What I've done is I have taken Wind in Your Sails, that adjusted trial balance that you find for the comprehensive problem, and I'm kind of using that for this particular example, so we can really look at it and see what we're looking at. Just like I shared with you in the Chapter 4 closing entries. So it's going to kind of work the same way that it's going to work for when we get to Chapter 4. What I want you to do is I want you to take and draw a line underneath those liabilities. So in this case, it's going to be underneath that mortgage payable. So it'll be in between mortgage payable and capital. It'll be right above capital. The thing to remember about your adjusted trial balance, when you prepare your adjusted trial balance, it needs to be in account number order. So you're going to pull those things right off of the ledger, just like you did for your trial balance, but it's going to have some more things on it than your regular trial balance did because we added some accounts. So you're going to pull that information off of your ledger, and you're going to build this adjusted trial balance. Things that I want you to remember about a trial balance: you list all of the account names, your debits are going to go in this column, credits are in this column. Whenever you begin a column, you always start it with a $sign. Whenever you end a column, all right, you're going to have $signs and double underlines, and these amounts should actually be in balance. You also want to make sure that you are underlining, before you add, because that's what it's stating, is you're adding up all of the information that's above that line. So whenever you finish your adjusted trial balance, you can come in. I want you to kind of draw a line under that mortgage payable account between mortgage payable and capital. It needs to be a line right above capital. And then I want you to take and draw a line right below the capital account. If you remember from some of the things that we've looked at before, we've looked at closing the accounts with this, which we will get into in Chapter 4. With this, realize that these are things that are going to be on your balance sheet. And those are the exact numbers that you are going to see on your balance sheet. None of that's going to change. Anything that's up above that mortgage payable will be on the balance sheet in the exact numbers that are there. The other sections that you are going to see is from income down. This is going to be your income statement. Will be on that particular item. And then the other information that you see here are these two will actually be part of really that, they're the owner's equity section. The owner's equity section consists of the capital and the drawing account, and so that's going to be that statement of owner's equity that we're going to be looking at. So this is how we would divide and use the adjusted trial balance to create these actual entries. It's by dividing it up in this way. So again, these are the items that we are really going to be seeing on the income statement, are our revenues and our expenses. We would then move forward to our statement of owner's equity, and we're going to use the capital account and the drawing account for that. And then the last statement that we prepare is going to be this balance sheet. And the balance sheet is actually going to span all the way down, and it's going to have all of those accounts that are above that line, plus it is going to have the new capital balance that comes off of the statement of owner's equity. So once we find the amount on the statement of owner's equity, it will move up to that balance sheet as well. Remember, the balance sheet is assets equal liabilities plus owner's equity. And so that is what we're going to be looking at as far as the balance sheet is concerned. The income statement is revenues minus expenses, and that's what's going to give us our income statement is revenue minus expenses. So that's the flow. We do have to prepare the income statement first, the statement of owner's of equity statement will be third, and then the balance sheet, it will be the third statement we prepare. So first is income statement, second is statement of owner's equity, and the third thing is that balance sheet. And then this pretty much ends up a lot of what chapter 3 and the main chapter is looking at.